Good afternoon. My name is Simone Sigston. I'm the Director of Johnson Recruitment. And thank you for joining us for this important and informative session. We're covering the topic of the recent State Revenue Office rulings dealing with payroll tax application for medical centres. And I begin today by acknowledging the traditional custodians of the land on which we gather, meet and work. For me, that is the Wurundjeri people of the Kulin Nation, and I pay my respects to their elders past and present, and I extend that respect to any Aboriginal and Torres Strait Islander peoples joining us today. If you don't already know Johnson Recruitment, we are an independent firm specialising in the recruitment of health, medical and dental, community services and social purpose sectors. We also recruit practice managers across all sectors and the staff that report to them. You can find out more about the Lawson HR group, comprising Lawson, Delaney and Brooker Consulting, by watching the video found in our events communications. We're also joined today by Practice Managers Australia, PMA, who are the premier industry body for practice management professionals. This is a must-have community for practice managers, and I'd encourage you to register if you haven't already through the link in the chat. A small amount of housekeeping. As we work through today's session, you are welcome to participate through commenting in the chat box. Just a reminder to please open the chat up to everyone. So you'll see that there's an option for panel or everyone. If you click everyone, then all guests can see your comments. Please use the Q&A function to pose any questions that you may have as we work through today's session. We will have a brief question and answer session at the end of today's webinar. And now the most important introduction. We are fortunate to have with us today Martin Sammut, who has generously agreed to facilitate today's session. Martin is Managing Director of Murdoch Partners, a boutique accounting firm based in Kew, which employs 30 people. Martin and Murdoch Partners specialise in providing taxation, accounting, and consulting advice to SMEs, and the practice has a strong health and medical services client base and area of expertise, very relevant for us today. Martin is a fellow of CANS, Chartered Accountants Australia and New Zealand, and is a fellow of the Taxation Institute of Australia. He is a former state chairman of CANS, and in his 35 years of public practice, he has been involved with various businesses, sporting and community organisations. Martin, thank you, and over to you.
Thanks very much, Simone. Now I'll just share the screen, so bear with me. Now I just want to make sure everybody can see that. Simone, is that being shared?
Yep, Martin, we can see it. Thank you.
Yep, thank you. Okay, so welcome everybody to the webinar on the impact of the recent payroll tax ruling on relevant contracts as they apply to medical centres. I'm certainly not expecting for this to go for over an hour, and 1 hour should definitely stop it. And Simone will let me know if I'm waffling too much. So I'm not expecting it to go for the full hour. I'm expecting that there would be some time for questions at the end. So Simone's already mentioned, Murdoch Partners are an accounting practice. We've got 30 people. We have a really strong specialisation in the medical and health sector. And, we've been addressing this issue of payroll tax in the State Revenue Office's position on this for quite a number of years. It's not something that, even though it did come out to the large population, probably when Queensland announced it back in December, we've certainly been aware of the State Revenue Office in Victoria and their view on this matter. So it has been on the radar with State Revenue Office for a number of years, but it hasn't been targeted actively. And without boring you about the history of it, in December last year, the Queensland Revenue Office issued a 16-page ruling on the application of payroll tax to medical centres. And it was about 8 months later that New South Wales and Victoria issued identical rulings. There's been a lot of lobbying with the AMA and the like, in Queensland particularly, but other states as well, to make some amendments. And last month, on the 19th, Queensland issued a clarification to their ruling, which was a 29-page ruling, so almost twice as long as the original ruling, but it was designed to clarify the earlier ruling regarding the application for relevant contract provisions. You'll see later in the presentation that there's a lot of differences between payroll tax amongst the various states. And as long ago as 2007, the various state and territory treasurers announced that they're really keen to overhaul payroll tax and achieve greater harmonisation. You'll see shortly just how far they have to go in relation to that. So what this ruling is about, it's about whether a contract is a relevant contract. And I'll just explain that right up front. A contract is going to be considered a relevant contract if it provides for the supply of services in relation to the performance of work by one party on behalf of another party, unless an exemption applies. And that will satisfy a situation where a practitioner provides services to patients for or on behalf of a medical centre. So a few important points just to raise. The ruling explains what a relevant contract is and how it relates to medical centres, but it also extends the concept of medical centres to include dental clinics, then physio, osteo, chiro and other allied health, radiology and similar healthcare providers. The Victorian ruling states early in the piece that this does not represent a change in their practice or interpretation. But having said that, they've been quite slow, or they've been very quiet in actually actively pursuing it. And I think what everybody feels here is that this is a bit of a revenue grab. The Victorian ruling also refers to a ruling issued in July 2011, where they define a worker as an employee, determining whether a worker is an employee or not. And what that does, it defines employee according to its common law meaning. And I'll talk in a bit more detail about that one shortly. So just because the State Revenue Office have issued a ruling in respect of this doesn't necessarily mean they're correct, and that's the first important point. This is their interpretation of this, and it can change on a case-by-case scenario depending on the various facts. It's important to note that the State Revenue Office can go back 5 years and amend employers' payroll tax returns, and that's whether you're registered for payroll tax or not. So they can go back quite a period and quite a way, and in fact they do that when they do a review or an audit. There's been recent amnesties announced. I'll talk about that a little bit later, but I just want to be clear that on one point, for the purpose of this presentation, I'm going to keep my terminology consistent with what's in the rulings, and that is I'm going to be referring to clinics as medical centres and doctors as practitioners. So there's a few practical issues that we really need to consider here. Firstly, you really need to stop thinking about the business as a medical centre. The business actually provides administrative services to practitioners who are running their own independent businesses. A couple of years ago, our firm were conscious of this issue, and we were dealing with it with a number of our clients, and we had a lawyer come in and speak to us. His advice was that we really need to start thinking about medical centres as though they're shopping centres, where the rooms and the facilities are being supplied to independent businesses just to do their own thing, just in the same way that what happens at Westfield Shopping Centre and the like. As we proceed through the presentation, as we proceed through the presentation, it's going to become evident that any changes to the payment arrangements to avoid being liable for payroll tax are going to require a number of issues to be dealt with. So from a practical perspective, there's a lot of things that you need to consider, and I'll just touch on these briefly. You're going to have to consider making changes to banking arrangements. There's going to involve changes to accounting procedures relating to accounts receivable and also the collection of service fees from practitioners. There's going to be an impact on the working capital, as practitioners may receive the patient fees in advance and then pay the medical centre, and the medical centre has to wait for the service fees to be paid to it. There's going to be changes within the accounting systems used and the general ledgers. There'll be changes to systems, internal administration procedures relating to accounting and reconciliations of patient fees and admin service fees. So there's going to be quite an additional workload for the administration. There'll be changes to IT infrastructure relating to HICAPS, Tyro, practice management software and accounting systems. You need to ensure that practitioners' bank accounts are linked with HICAPS and the like. You need to ensure that existing contracts are reviewed by your solicitor for compliance with this ruling, and that is probably the big takeaway from this presentation. You really need to consider engaging a lawyer who is competent in understanding medical centres and also competent in the area of payroll tax. Having said that, there could be some other unintended consequences of changing existing contracts, and that's an issue that each centre needs to consider. And in fact, based on a number of discussions I've had with a number of my clients, some of them are making the changes and getting their contracts reviewed. Others are weighing up that the unintended consequences of changing those contracts aren't worth it. So you need to respect that as well. The other issue you'll need to do is you'll need to review the website, internal and external communication to ensure that the medical centre doesn't promote itself as a medical centre and that the practitioners are not employees. So that's important. I'm going to talk very briefly about a few of the amnesties and amendments that the various states have announced. I won't go into these in a great deal of detail. I think Simone may have mentioned that the slides that you're seeing at the moment, they'll be made available, I think, to everyone who's attending. So you don't need to get too worried about this. But if you have clinics in other states, then it will be an issue. So just very briefly, in Queensland, there was an amendment available on payments made to contracted GPs, where those payments fall under the extended definition of wages in the legislation. Now, there's an amnesty on that up until the 30th of June 2025. And in order to take advantage of that amnesty, those businesses really need to register online by the 10th of November and then, make some voluntary disclosures and the like. Similarly, in South Australia, the same amendment or amnesty has been proposed, and that only applies up to the 30th of June 2024, and the same registration process applies, but you've got until the 30th of November 2023 to comply with that. New South Wales have announced something totally different again. They've announced a pause to payroll tax. They're going to pause medical centre payroll tax audits for 12 months. They're going to suspend any penalties and interest that is going to accrue on some of those debts. But the real important point here is that this amnesty only applies to general practitioners. It does not apply to any other allied health or other healthcare practitioners. And in Victoria, there's been nothing. So the very latest update, which led to the confirmation of the tax ruling 6.2 on the 19th of September, really came about through a lot of lobbying with governments. And the Queensland government announced that what they're going to do is change the scope of the original ruling, which would reduce payroll tax in the following circumstances. And that is where patient fees including Medicare benefits or any out-of-pocket expenses, are paid directly by a patient to a practitioner for that practitioner's services, there will be no payroll tax. And that is a very big win. So how does that look? Effectively, what we're saying is that if the patient goes to a clinic and it sees the doctor, by paying the doctor directly, and that would include the Medicare benefit and also any out-of-pockets, the doctor would receive that money. The doctor would then pay the medical centre the service fee that it's entitled to. Now, that situation would not be subject to payroll tax unless there's a deemed contract applicable. But on the surface, that is perfectly fine, and we don't have to worry about payroll tax in that regard. Just looking at what the impact of payroll tax is. In Victoria, and I'll focus on Victoria here for the moment, but in Victoria, it's in metropolitan Melbourne, the threshold is $700,000 and the rate is 4.85%. So it's quite a significant impost on businesses, and you'll see that later. In regional Victoria, the rate is $700,000 threshold again, but the payroll tax rate is significantly less, 1.2125%. Now, there are some other surcharges that the government have been putting in place to try and recover some of the COVID debt, as you can see, but they're probably unlikely to apply to anybody listening to this. But regional Victoria is defined as regional councils outside of metropolitan Melbourne, and there's currently 48 listed regional councils which qualify for this. Looking at the map of Australia there and the various rates, you'll just see how far we really have to, the state treasurers have to go toward achieving greater harmonisation. You can see that there's different rates and different thresholds across the various states and territories. For example, I mentioned what Victoria was, the 4.85% on salaries and super and above $700,000. In New South Wales, the rate is 5.45% on anything greater than $1.2 million, and the ACT 6.85% on remuneration greater than $2 million. And the various states have different, different thresholds and different rates. I won't go through those now. It is important to understand, though, that where you have businesses that operate across different state jurisdictions, grouping does apply. So it means that you would basically add up all of the wages across around the country, and they would all be grouped as being one business and paying payroll tax in all of those various states. But you do only get the one threshold applying for each group. So the big issue is, when is a contract a relevant contract? This ruling is specifically about relevant contracts as they apply to medical centres. And as I mentioned right at the start, so a contract is a relevant contract if it provides for the supply of services for the performance of work by one party on behalf of another party. And as I mentioned, if that practitioner is servicing patients for and on behalf of the medical centre, then that would be subject to payroll tax. If they're servicing patients that are their own patients, then that would be different. Generally, payroll tax is payable by employers on all taxable wages paid to a common law employee. Where there's no common law employer-employee relationship, a liability for payroll tax can still arise if it's established that the amounts are paid under a relevant contract or to a contractor. And there are deeming provisions that apply to what is an independent contractor. So according to the ruling, if the contract is a relevant contractor, then the worker, being the practitioner, is deemed to be an employee. The principal which is the medical centre, is deemed to be an employer, the payments made to the practitioner are deemed to be wages and are subject to payroll tax unless there's a legislated exemption which is applicable. And I'll go through the exemptions shortly. So let's look at the issues to determine how a worker can be deemed to be an employee. The term employee is not defined in this ruling, or it's not defined in the Act. Therefore, there's a common law employment tests that are applied to determine whether a worker is an employee. The ruling, PTA 038, sets out a number of those criteria, and particularly these common law tests. The employer test can be difficult for business to apply, to accurately assess, particularly where they relate to contractors. And I've outlined a number of factors in the next 3 slides, some of which are fairly self-explanatory, and some of them clearly imply whether a practitioner would be deemed to be an employee or an employer, an independent contractor. Now, I don't propose to go through all of these factors. As I say, they'll be included in your slides, and you'll be able to go through those at your leisure, as well as you can read the ruling. But it's important to be aware that the substance of the arrangement in place is always going to override the actual agreement in place. And so what do I mean by that? Even though a contract clearly states that there is a principal contractor relationship, if there's enough of the factors listed which indicate that in fact it's an employer-employee relationship, then the contract will be deemed to be a relevant contract. There's nothing new in any of this, but it is important to understand that just by having a contract that says that these practitioners are not employees, and I've seen those contracts, that's not enough. It's always substance over form. It's important to ensure your contracts reflect what is actually the case, and that's why I mentioned earlier that a solicitor who understands medical centres and also understands these issues at hand, it's very important. So just some of the points in relation to these common law tests, and you can see there I've got control and direction. What degree of control can a medical centre exercise over the practitioner? And the issue is whether the medical centre has the authority to exercise that control over the practitioner. Whether they do or not is not really the issue. Similarly with the contract, and as I said before, the contract versus what the practical application is. If a contract characterises a relationship as a principal contractor and not employer-employee, the terms of the contract will carry very little weight if it contradicts the effect of the agreement. Independent businesses, there's a few things to consider there as to whether somebody is running an independent business, who bears the risk, and so on and so forth. You can read those at your leisure, but there are a lot of factors. Also, things like provision of tools and equipment, risk, and other factors, particularly the hours worked and the regularity of that work, and particularly whether the employee is required to comply with issues like wearing company uniforms, but certainly hours and where they're expected to be are important. So let's get back to the ruling. The ruling listed that I mentioned earlier that the relevant contract provisions apply unless there are some exemptions, and there are these 3 exemptions, and I'll briefly touch on those. And the ruling does provide a lot of good examples in relation to this as well. So I'm not suggesting you're all going to race out and read this ruling. Some of you probably have anyway, but you'll note that it does provide some fairly good practical examples. Now, where a practitioner performs similar work under separate contracts with different medical centres or hospitals concurrently, it would be considered to be exempt. So that's one exemption that you've got there. That if you've got people that are working for different employers or different medical centres, well, they'll probably be exempt. But if that same practitioner works full-time with your medical centre and then, works a day, they might work 4 days with your medical centre and works at nights or afternoons or weekends on an ad hoc basis with other medical centres or hospitals, then it would unlikely be exempt. The second exemption is that the practitioner works less than 90 days for the medical centre in a financial year. Now, that is really a question of fact. So that can be worked out fairly quickly. And then the final exemption is if services are performed by 2 or more people. So that applies if a medical centre contracts with a practitioner and the practitioner and at least one other person employed by the practitioner perform the work required under the contract. An example that comes to mind is where a dentist, a specialist dentist, needs to employ a specialist nurse to help in some of the work that they might do. Under that circumstance, that would be considered work undertaken by more than one person, and that would be exempt under the payroll tax legislation. It's important to note here that that exemption will not apply if that second person is engaged by the medical centre. I'm going to briefly touch on a couple of cases. They're both referred to in the ruling. I don't want this to be a legal discussion, but I think it's important that I just touch on them. Well, a lot of people have heard of them, and they're considered sort of seminal cases in this area, but they'll also outline some of the facts and issues to consider that I touched on earlier. Whoops. So the first one's the optical superstore. It's a Victorian case in the Supreme Court and went to appeal. It was held that contracts between the optical superstore and the optometrist were relevant contracts. The superstore was supplied with optometrists to perform the work. The services of the optometrist were provided to the optical superstore as well as to the optical superstore patients and even perhaps their own patients. They had to attend agreed locations at agreed times. And the other point, which I'll touch on shortly in a bit more detail, is that the court found that the tenancies, the contracts were not tenancies because the optometrist did not have exclusive rights of occupancy to any of those locations. So even though this is a case that is pretty important as far as the State Revenue Office is concerned, it also looks pretty obvious when you boil it down, particularly in the areas that the optical superstore had control over the patients. So, over the optometrists. So they had the optometrists working for their clients. They had operational administrative control over the optometrists, and they, as I say, I think that the optical superstore tried to run an argument that they were actually just occupying space within their centres and that had effectively a tenancy arrangement. Now, the court dismissed that, and it's just worthwhile touching on, what is a tenancy contract, and is it relevant? A tenancy contract is an exemption under the Payroll Tax Act, and if a tenancy contract is in place, it's not a relevant contract. Because basically it's not a relevant contract if the practitioner does not supply work-related services to patients on behalf of the landlord. The practitioner must operate their own independent medical practice, and they'll have to be responsible for their own, advertising, attracting patients, just providing services to their own patients and managing things amongst themselves. Under a tenancy contract, the landlord provides a practitioner with the use of some space in order to do their work unfettered. Under the tenancy contract, administration services can also be provided. So the landlord can provide the space, but it can also provide receptionist areas and systems for storage of patient files and some accounting support and a use of some IT. So that can all be included as well, as it can be where a medical contract, where a practitioner is working for a medical clinic. or a medical centre. A tenancy contract will typically reference the space that's being leased and other issues like building maintenance and other services that they're going to provide. And if a tenancy contract refers to a medical centre as the landlord and the practitioner as the tenant, but in substance, if that practitioner is providing medical services on behalf of the medical centre, then the tenancy contract will likely revert to being a relevant contract and subject to payroll tax. So it's pretty important, and it goes back to my earlier point about substance over form. And there's a quote there, a CFMMEU case where the judge basically said that the manner in which the parties describe or label their relationship in a contract cannot change the character of the relationship established by their rights and obligations and effectively by their actions. The other case that everyone's familiar with is Thomas and Nars, a New South Wales case. It was in the Civil and Administrative Tribunal and again went to appeal. It was held that the agreement between Thomas and Nars, being the medical centre, and the various doctors was a relevant contract. And it really is important when you see these things, these points, it's pretty obvious that it would be caught under this ruling. The agreement included that the practitioners must work 5 days a week, including some weekend rosters. They must provide notice of and get approval for any leave. There was non-compete clauses whilst they were employed and restrictive covenants after they depart. Again, the facts and circumstances of this case clearly demonstrate that Thomas and Nars had operational and administrative control over the doctors. And that's why I come back to the comment that I made in slide 4 earlier, and that is that this is the State Revenue Office's interpretation, and the interpretation varies on a case-by-case basis depending on the facts. Now, when you look at these facts, it's pretty clear that that is the case, but not every arrangement is as cut and dried as Thomas and Nars is. But if your circumstances fit a lot of those parameters, then it's fairly clear that you're going to have an issue that you need to deal with. Now, I would say that Thomas and Nars were very unfortunate. They operated their practice in a way that just about everybody else have run their medical centres over the years. And in short, they were just very unlucky to get picked up for a review and an audit. So what does that mean? It means that people who are listening to this webinar and who are looking at doing something about this can learn from that and really need to structure their practices a little bit differently in that regard. It's important to just point out that if you do have an employer-employee arrangement and you're employing people, there are other obligations that come with that. So whereby you're just paying people the net amount after a service fee, currently, and you think that that's fine. You don't have to worry about a few of these other points. If it is that it's felt that payroll tax is applicable and you do have an employee-employer relationship, then there'll be obligations to withhold PAYG. There'll be superannuation guarantee obligations. There'll be work cover. And then there's going to be other entitlements such as annual leave, sick leave, and long service leave. So it has some bigger implications than just payroll tax. So now let's just look at some plain vanilla examples of where payroll tax may or may not be applicable. And what we're looking at here is really the common payment arrangements. And this is this is going to be fairly important. And I'm sure a lot of you will be able to relate to this. But under the first scenario, the patient goes to the medical centre, that it actually, in going to that centre, it pays Medicare benefits and any out-of-pockets to the medical centre, and the medical centre then pays the doctor or the practitioner the gross fees less any service fee. Under that scenario, it would be subject to payroll tax. A patient who goes to the doctor pays the practitioner its Medicare benefits and any out-of-pockets, and the practitioner then pays the service fee to the medical centre, assuming that they're not assuming that they're not working for the patients of the medical centre, then under that scenario, it would not be subject to payroll tax unless there's other extenuating circumstances. And it's pretty clear in the Queensland ruling, clause 56, in fact, where this would not be considered wages and not subject to payroll tax. Now, it's important to note that the second payroll tax ruling that Queensland put out has not been adopted in any way, shape or form by certainly Victoria or New South Wales. They're still considering all of that. I've lifted this from the ruling, and it talks about where there's a payment of an assigned Medicare benefit which is deemed not to be wages. And it's very similar to the situation I just went through there, where the patient assigns the Medicare benefit to the practitioner pays an administration fee to the medical centre. The assigned Medicare benefit payments are not taken to be wages because there's no payment by ABC. So firstly, there's no payment at all by ABC. Also, these payments are not deemed to be wages because they're actually a payment of a statutory benefit under the Health Insurance Act rather than for the practitioner's service as a deemed employee. So that's one important point. Secondly, where we have the same scenario where the same patient pays an out-of-pocket fee to the practitioner and the practitioner pays the administration fee to the medical centre, it's exactly the same scenario, that there's been no payment by ABC, so there's no it's not subject to payroll tax. So a critical factor in all of this and in determining whether there's a payroll tax liability or not hinges on the payment arrangements between the patient and the medical centre and the practitioner. So what I want to look at now is just the financial impact of this and the financial impact of something as little as changing the payment arrangements. What I've got here is a slide which looks at a very simple scenario. I've looked at a medical centre that has 5 practitioners or 10 practitioners, and if I just look at the first column on the left being the 5, where the medical centre has 5 practitioners, and let's just say the average fee per the practitioner is $500,000. There'll be gross patient revenue of about $2.5 million. If there's a service fee of 30%, then that is retained by the medical centre, and the balance, $1.75 million, is paid from the medical centre to the practitioner, if that's the way it works. If that is the scenario at your clinic, and they're the numbers, then you'd be subject to payroll tax at 4.85%. So it's about $85,000 per annum impact of payroll tax on that scenario. And clearly, if you've got 10 practitioners doing the same numbers, it doubles to almost $170,000. So as you can see, there is quite a financial impact if payroll tax is applicable to the medical centre. Bearing in mind a couple of things. The State Revenue Office can go back 5 years and they can apply payroll tax retrospectively. They can also apply penalties and interest. And the other point to note is that the onus of proof is with the medical centre. It's not with the State Revenue Office to prove that this is correct. So as a guide, if you've got medical centre with 5 practitioners and they can go back 5 years and they can charge some interest and some penalties, the potential exposure there is around $500,000. That's for a clinic that's got 5 practitioners. Why is this important? What I've looked at here is effectively the top tax audit insurance claims. Now, this has been lifted from a group called the Accountancy Insurance, and they provide tax audit insurance to clients of accounting firms and the like, just to cover the basis that they may get an audit or a review by the tax office. What you can see, I've got this over a 3-year period. What you can see on the left is 21, then 22 in the middle, and on the right, the 23 year. It covers things like preparation of BASs and assessment of BASs, what the employer obligations are, payroll taxes, income tax, and then some high-level specific income tax issues. And if we just focus on the green box, being payroll tax, you can see that back in 2021, it was the 3rd highest rated area of activity for any tax audit insurance claims. In the 22 year, that dropped to number 4, but in the 23 year, it's the number 1 issue that is impacted on, subject to tax audit insurance claims. For the 2023 year, payroll tax claims accounted for 13.7% of all claims nationally. And in Victoria, payroll tax claims grew by 42% in the 2023 year. So what are the options, aside from taking out tax audit insurance? There's a number of options here. I think the first one is you can do nothing. You can risk a future payroll tax audit. What that means is that there's potential for retrospective application and penalties. And it's going to be too late if you do go to get down that track to recover any of this from any of the patients or the practitioners. You can do what we've been talking about here, and that is make some appropriate changes, looking at changing payment arrangements with practitioners, looking at reviewing contracts with practitioners, reviewing your bank account arrangements and your account receivable systems to make sure there's no negative impact on the business from a working capital perspective. Review your banking and your IT implications, and just as importantly, make changes to website and any other communications. So they're going to be some of the key things that I'd be suggesting and recommending. Other options, you can increase your fees to patients, and that's certainly something that people are doing, practices are doing. You can try and reduce your payment to practitioners, but I don't think that's going to work. And finally, you could request a private binding ruling, or you can just pay the additional payroll tax. So they pretty much are your options. So the practical steps here, what practically should you be doing or considering in order to reduce your payroll tax liability? I think you need to ensure that the fees generated by the practitioner are going to be paid directly to the practitioner. So changing those banking arrangements and payment arrangements are critical. Practitioners have to service their own patients. They can't be servicing patients of the medical centre. Allow the practitioners to set their own hours and work at unrelated practices and hospitals if that's what they choose. I know it's a tough one, but that's what the contracts need to provide for, and that's a big issue that you need to be considering. Ensure that invoices are issued to patients in the name of the practitioner and not in the name of the medical centre. That's probably an easy one. Ensuring that the practitioners maintain their own provided digital access account. It's important. Avoid advertising the medical centre as the provider of the relevant medical services, and that the practitioner is part of that medical centre. So any medical centres websites that have our doctors include and list the doctors as effectively as being practitioners of the medical centre, they're going to be looked at. And the State Revenue Office do go down the track of just Googling various medical centres. I have heard it suggested at other seminars I've attended on this topic and similar topics that they would be advising businesses to take the word medical centre out of the name. I probably wouldn't go that far, but that's the way people are thinking on this. Practitioners should use their own staff if they do require that specialist assistant, as I mentioned earlier. You've got to limit any restraints of trades on practitioners to just include things like the non-solicitation of staff. Don't refer to anything about non-competition, particularly once they've left. I mean, they won't hold up anyway, really. And then you need to ensure that the medical records are the property of the practitioner and ensure that the medical centre has written agreements in place with the practitioners. So that brings me to the end of my part. I'll hand it back to Simone to take it from here.
Well, thank you, Martin. And just a reminder, if you can stop sharing that screen, then we'll hopefully my face will pop up on the screen for everybody else.
Okay, just bear with me.
Sure.
This might be above my pay grade. Talk amongst yourselves. You take over, and I'll see how I go about fixing this up.
Sure. Well, actually, while you're doing that, maybe you can think about how you may answer this question from one of our guests. So, Martin, in your experience, what percentage of practices have a probable liability?
I'd say a lot, without putting a number on it, a lot. There's no doubt about that. It's a big issue, and that's why it's causing so much grief. So yeah, a very high percentage. And hang on, I think I might, that's helped me. Oops. Oh, yeah. Sorry, I'm just trying to unshare.
That's okay.
Okay. No, sorry.
That's all right. I think Emma has unshared your screen.
Oh, she had. Okay.
Yes.
Right. Excellent.
We're all good.
Okay. Sorry about that. Yeah. So in answer to your question, without putting a percentage or a number, I think there's a hell of a lot of practitioners, because it is an issue where, medical centres have run, as with the Thomas and Nars case, they've been running things that way for a long period of time. So in answer to your question, a lot still.
Yeah, absolutely. And another question that's just popped up, what do you expect the impact to Victorian practices to be in the short and long term? It's quite broad, but if you can perhaps answer that.
Yeah, I think a few things. Firstly, it's pretty clear, without being political, that there's a lot of increases in taxes across the board, not just in relation to this, but in a whole host of industries. Taxes are being raised in Victoria to cover a lot of the COVID-related expenditure. So that's the first thing. I think we've still not heard anything from Victoria in relation to this. Their view on this is that this is exactly the same system that they've always, the same understanding that they've always approached payroll tax on, that it's been applicable to medical centres from day one. So I cannot see them changing that in a hurry. Yeah.
Thank you. And maybe another one that's come up, thank you to one of our guests. If the doctor is paid directly into their own bank account, but the medical practice withdraws the service fee from the doctor's bank account, will this still run into problems with the new payroll system?
Okay, so it's going to depend on who has control on that bank account. So if it is that if it is that the practice, and we've had a number of situations where initially we thought that this was a way around it, and I'm going back a few years now, actually quite a few years, where we advised medical centres to open up what we call independent doctor accounts. And what would happen is that the fees would go into those independent doctor accounts, and then the money would get paid across to the practitioner. So they're not accounts that are owned by the practitioner, and they're actually not accounts that are controlled by the practitioner. They're being controlled by the medical centre. So under the situation you mentioned, if the control of those accounts is with the medical centre, then that won't in itself be a way around it. I think you need to give control to the practitioners.
Thank you. And maybe we've got time for just one more. And a reminder to our guests that we will also share this presentation to you by email. So you'll be able to watch it in its entirety again, or just go to the relevant bits that may answer any questions that you have in your mind but haven't posed here today. So last question for you, Martin. If we change the setup to payments being from payments/Medicare to the practitioner, and then they pay their service fee to the practice, will that be sufficient to avoid the payroll issue? Or do we have to extend it to covering changes to the website, etc.?
Yeah. Okay. So, yeah, in answer to that, yes, it would, on the surface, it would get around the payroll tax. And that's specifically mentioned in the Queensland ruling. As I say, in Victoria and New South Wales, they haven't adopted that second ruling that Queensland have issued. I expect that they will, but they haven't. However, it could still be deemed to be a contract if it is that the facts and the form of the arrangement is that practitioner is still seeing patients of the medical centre. And if it is that the contract that the medical centre and the practitioner have is one that the medical centre controls the working hours and what the practitioner does. So yeah, I think it's definitely needs to be looked at holistically. One, the payment arrangements, and that will go a long way to sorting things out. But if it looks like a duck and it waddles like a duck, then it probably is a duck. And if the circumstances in your contract are that it's an employer-employee type relationship, then that will be a deemed contract, or it would be deemed to be a relevant contract, and it would be subject to. So, yeah.
Thanks, Martin. Well, a lot for everyone to take in today, and as I said in my introduction, informative and important. So, Martin, thank you so much for sharing your knowledge and your expertise on this subject. There's so much in there for us to all understand. You are an expert in this area. I know that people can make contact with you directly if there are more questions or would like to seek some advice from you. But on behalf of everyone who has joined today, thanks so much. We really appreciate you giving up your time to talk about this for our community.
No worries. Thank you. Thanks, Simone.
Terrific. Thanks, everyone.
Yeah.